Well, thank you for coming on the podcast. And we were just talking, you've had a pretty crazy week. Compared, I thought I had a mental week, and then I saw everything that you've been doing. So how are you doing after this week?
It has been a bit crazy. I think I'll need to catch up at the weekend a bit as well. We've had three big things go on this week. So on Monday, we announced that the first UK corporate pension scheme, has invested in Bitcoin. So we'll obviously talk more about that.
Yep.
The second thing is, this is more of a firm-wide thing, that we relaunched our brand, which fits a lot better with sort of the innovation and dynamic nature of things like Bitcoin is a fantastic example. And then the third thing is we had a showing of the Dirty Coin movie, which I'm sure your viewers are familiar with. And we had all kinds of people from pension schemes and charities and family offices and lots of others attend that event on Wednesday evening. And that seemed to go down really well. Opened lots of eyes into how environmentally and socially friendly Bitcoin mining is. So that was really good fun. And then in between, just trying to keep on top of things.
Trying to rest up in between. It's
sleep is overrated.
Yeah. You'll do that when you die. I've seen Cartwright and you actually everywhere on like social media this week. Let's start off with the first one that you mentioned. That Cartwright had advised an unnamed UK pension scheme to make a 3% allocation to Bitcoin.
Yes.
Which is the first of its kind in the UK, and it's massive news. Firstly, congrats to you, and congrats to the whole team that worked on it, because I do know.
Congratulations to the client.
And the client, yes, of course. That's first. We're going to dive into that because I'm very interested to know a little bit about the training behind it. But that's one of my later questions. So a few people were getting confused and thought that Cartwright were the pension scheme, which this is not correct. Can you just dive into a little bit, a quick summary of who Cartwright are and what exactly you do?
Yeah. So we're the advisors. So we're not taking the decisions. We're helping the trustees of the pension scheme to make the right decisions. And that's lots of things. But in terms of this particular Bitcoin investment, there were a few steps involved to getting them comfortable with it. So the first thing was to help them to understand what is money. And that's a topic that very few people have actually taken the time to really dig into and understand. But you need to take a few steps back to understand that before you can understand Bitcoin, before you can understand whether you should invest it and why. So there's some history of money in there. There was some stuff around the monetary premium and what that means. So it's the value of, let's take an example. So in a gold coin, you sort of split the value of a gold coin into two parts. So one is the value because it is used as money, and the other part is because it's got industrial uses. You can use it in. It's very good. You use it so you have some in your phone, and industry, and there'll be various other things it can be used for. But it's the two parts: monetary premium and industrial uses. And for the first time ever, we now have an asset which is 100% monetary premium in Bitcoin. That makes it quite difficult initially for people to understand, to get their head around. But once you realise that and a few other things, then it starts to make a lot more sense. So there was some training there. And then there was that sort of generic training, as it were. And then there was some more specific training covering things like, in terms of their particular scheme, is it worth it? Does it make sense to do it for them? And so there was a few things that we had to make sure we covered off. So one of the first filters is, what is your time horizon? So this is a defined benefit pension scheme. And so the ultimate objective for the vast majority of defined benefit pension schemes, or sometimes known as final salary pension schemes, is that at some point they'll hand the whole scheme over to an insurer. So there's an event at some point when that happens that means you just pass everything over, and from the trustee point of view, they're no longer involved. So that's their time horizon. And in this particular case, the time horizon is 10 years. Now, if the time horizon had been 6 months or even 2 years or 3 years, then this would not have been the right thing to have done. Because it's, as we know, a highly volatile asset, at least for the time being. And so if you're going to need to sell it in the short term, you've no idea whether it's going to be more or less than you paid for it. Yeah. So that was really important. So they do have a long time horizon. And then we did some analysis around, okay, if we put 3% in, and we tested out different percentages to make sure that they were comfortable and got it about right. So based on a particular percentage, if the Bitcoin allocation, so they put 3% in, let's say it went immediately to zero, just disappeared. What would that do to their overall objectives? And in this particular case, it meant that time horizon to reach that what's known as buyout point, it wasn't 10 years, it was longer, because of course you've lost 3% of the assets. But how much longer? Well, it's 3 months longer. So you go, okay, well, that's not much difference, actually. But it's still worse, but it's not much difference. And then we looked at, okay, well, what about the positive scenario? The positive scenario was based on various assumptions or best estimates for the future. It was that the time horizon went from 10 years to 8 years. So it's a big reduction in the time period if it goes well, and a slight increase in the time period if it goes really, really, the worst case scenario, it goes to zero. So that helps to demonstrate that it's asymmetric. It could go really, really well or a bit bad. And those are brilliant bets to take. So that was really helpful. And there's various other types of analysis as well to try and get comfortable with the risk involved. But that was the key one.
Yeah, that's massive. So the risk reward was 3 months to
2 years.
2 years.
Yeah.
Wow. I can see why they went for it then. It's because you're obviously adding in a lot more training in there on top of Bitcoin training. Like Bitcoin, I don't know why I'm using the word training, but Bitcoin knowledge, understanding, let's say. Like, as we know, it takes a long time to get to a decent knowledge base on Bitcoin to feel to have that conviction for it. So you've taken the client through this and then applied it to their scheme, to their fund.
Yes.
Like how long is this process taking you?
About a year.
Wow, that's good.
Yeah.
I would say when you compare it to an individual going through Bitcoin's understanding, my initial reaction is that's good. Do you believe that's good?
Yeah, I think it's different, right? So if you think of, when I did it, or when you did it, or another individual person does it, you're starting from scratch, and you're searching for information, and you're going to take some wrong turns along the way. You might, I don't know, make mistakes like accidentally buying NFTs and stuff like that. So you're going to end up, you're going to take a lot of wrong turns, and you're going to then circle back and sort of rethink things through, and you're covering it all in your own brain. That takes more time than having an expert advisor in the room guiding you and saying, you want to think about it this way, you want to think about it that way. There's some traps, you've got to be careful of this. There's those risks. We're going to look after that risk by doing something else, and so on. So, and guiding you through that, I think there is a difference, and that is consistent with how we treat every other asset class. Some take longer to have training, some take shorter, but it's the same sort of thing. You've got an expert in the room who walk you through the pros and the cons, the upside risk, the downside risk, to get to a sensible decision. So I think that's part of it. Another part of it is that we're able to do lots of fancy modelling. So that gives a lot of comfort. And the other thing is that, bearing in mind, we're talking about putting 3% in.
Mm-hmm.
We're definitely not saying put everything in. And that's a big difference. And sometimes from an individual point of view, it can be, how can I get comfortable with putting a really big chunk of money in? Whereas here we're talking, as I say, 3%. So there's a few things there which just mean that we don't need to take quite as much time, but really focus in on what matters.
Yeah. And did you use other countries as examples? Because I know other countries are ahead of the curve a little bit more with allocating Bitcoin into pensions. Did this come into the training at all?
Yeah, it did. So, I mean, this is the first in the UK, but it's not the first in the world. And, on one hand, we're hoping that we've started to break the dam, and people will feel freer to come out and say, okay, I want to invest in Bitcoin as well, if they are a trustee of a pension scheme. So we're hoping we're starting to break those barriers down. But also, these trustees, part of the barriers being broken down for them was that other pension schemes in other countries are doing it. Charities get involved. There's obviously lots of companies that have started to get involved. It's still early, but there is a small minority that are serious about this around the world.
Yeah. So I messaged her in the week, and I was like, fair play to your PR team and marketing, because it was everywhere. It was everywhere on social media. Certainly in the Bitcoin space. All the outlets seem to pick it up because it's such huge news. What have you seen the reaction be, or what's your perspective on the reaction from both the Bitcoin space and more traditional finance or other pension schemes?
Yeah. Okay. So in terms of the Bitcoin space, I obviously took the. It was bad timing for me to delete X from my phone.
It was bad timing.
But I'm pleased to say that a few people sent me screenshots, so I'm happy to accept more screenshots if there's good stuff out there.
I can send more.
Players reports. So that sounded really, really positive. In terms of sort of TradFi, as it were, then we didn't know. It's a sort of that, and that's actually one of the reasons why the scheme is unnamed, because if we didn't know what the market reaction would be, we knew it's the right thing for the scheme, and they're absolutely spot on doing the right thing for them. But there's people out there who like to complain about these things, make a bit of a fuss, a bit of a noise, and we just didn't know. We didn't know what the reaction would be. There's been the odd bit of that, but the vast majority has been really encouraging. The vast majority has been positive. The vast majority has seen it for what it is. It's part of normal portfolio allocation or portfolio construction, as we call it. It's just building a portfolio, and to build a really good portfolio of assets, you need to include as many different types of assets as possible in your analysis. Doesn't mean you're going to buy them all. And you choose from that big range to get the best possible trade-off between how much risk you're taking and how much reward you could get from doing it. So most people In fact, the vast majority from what I've seen were positive about that and just sensible about it.
Yeah, it's that's the highlight already for me, is that the analysis that you went through of between the 3 months and the 2 years, like that's huge. I didn't realize it would be quite so different. What so looking at for those people that don't really understand the pension world, I'm probably one of them. And how significant a step is this actually in that world? Because we've seen it in some other places as well, but especially in the UK with regulation being as it is, not many people would think that this would happen just now in the UK. How big a step is this?
I mean, I'm probably biased, but I think it's huge. I think it's. I think we'll look back in 5 years, maybe a bit longer, and it would just be normal to have Bitcoin as one of the assets that were considered in the choice of assets for institutional investors. Just be normal. So it's very exciting being at the forefront of that. It's an exciting time.
That it is, and I know that the client is. I know the time horizon is long, as are we. Like that's kind of what Bitcoin does to you. But surely, have you had any communications over the last month or so? Because you picked a good time to just give them that little bit of market increase that happened. I know it's only 3%, but surely now that they've got eyes on Bitcoin.
I mean, it is helpful. I mean, I'm not in any way claiming we can time the market. It could easily have gone down, obviously, and maybe it'll go down next week. Who knows? So it's definitely a long-term investment. We're not looking to, if it goes up quicker, then obviously that's brilliant. But that wasn't part of the plan. I was always keen to try and get it done before the US presidential election. I mean, again, that could have gone either way. It could have gone either way, whichever candidate was elected. So it wasn't really about that. It was more about markets were fairly calm, or Bitcoin price was fairly or flattish during October in particular, I think.
Yeah.
So that's from an institution point of view. You just want to go in. You don't want to know. You want to know what price you're getting. You want to know that everything's going to get a plan. Keep things simple. If markets are going up and down like a yo-yo, it does complicate things a bit.
Yeah, I can imagine.
But glad we got lucky, obviously.
Yeah, it must just be a nice little bonus.
Exactly.
But what we've had, so I put a post out on X. I was about to say tweet. I don't know if that will ever change. I put a post out and I asked, does anyone have any questions? I also put that on Reddit, and so many people were asking about how did you arrive at the 3%, which I think we've kind of covered, but we can go into that a little bit deeper. And is the 3% fixed, i.e., do you buy more if the price drops, or do you sell if it rises? How is the mechanism work in that?
Yeah, okay. So why 3%? So we did a lot of analysis internally to get comfortable as the advisors that whatever we did was going to be a sensible thing to do. Obviously, there's no one right answer, so we wanted to give a choice, a range. But obviously, we didn't want to go too low because then the impact is not meaningful enough. We didn't want to go too high because then you've got too much exposure to one asset. So there's a middle ground, and our job was to find what's that middle ground. So where we ended up was 2 to 4% was that range that we were comfortable with, given the specific circumstances of the scheme.
Mm-hmm.
And then we talked about that range with them and the pros and cons going high or lower. And I mean, 3% is obviously in the middle of the range, and sometimes there can be some comfort in going for the middle answer. I don't know how much that was real, but that was the number that they felt comfortable with, given their circumstances. I mean, as a slight tangent, there's a quite interesting, I mean, you'll be familiar with this, but there's the black hole theory, of course, which is that I briefly mentioned the monetary premium a bit earlier. So where is the monetary premium right now? Well, of course, it's in, okay, some of it is in currencies, but some of it is in bonds and gold and property and equities. You can argue there's some in all of those. It's highly questionable how much, but there's almost certainly some. So if we see a pure monetary asset, Bitcoin, start to suck out from those different asset classes some of that monetary premium to transfers across, then it's coming out of exactly the assets that pension schemes and charities and so family offices already have.
Yeah.
Because they already hold their bonds and equities and property. So you're then in a situation where, okay, if this is true, and if the black hole theory has a chance of being correct, the most risky position is to have no Bitcoin. So it's about how much you have. Now, it might be that some people just feel happy with 1%, and that's fine if that's what they're comfortable with. Some will want more. But I think that, it's quite important to turn it on its head, because some people start off from the position that no, 0% is the least risky position, whereas actually I don't think that's true in practice. So anyway, that's why 3%. Yeah. And then it's whether it's fixed or not. So it's not fixed, because obviously it's going to move with market. The price goes up and down, it's going to move. So instead, we put a rebalancing mechanism around it, because you've got one of the risks that institutional investors have to manage is how much exposure do we want to any one asset? And it might be different to different assets, but there's a maximum exposure you want to a particular asset. And the problem with if you project Bitcoin far enough into the future is that then suddenly it's 100% of the assets. Well, not quite. Maybe it's 99%. But you've got, so that's not a situation that they'll be comfortable with. Probably no institutional investor will be comfortable with that, except Michael Saylor, presumably. So instead, there's going to be a different number that they're comfortable with. And our approach is completely bespoke to each client. But let's say they started with 3% and they were comfortable with, let's say, 6%, just for the sake of argument. So we can allow the value of what they've put in to double, but we don't want to go any higher. So what we can do is we can set some rebalancing up that happens then pretty much automatically. And it means that when the Bitcoin price doubles from when they first put it in, then we'll sell some of it. Maybe we'll sell enough to get back down to the 3%, or we'll just trim a bit. And that way we can then cap the total or the maximum allocation that is at any one point in time. Another advantage of that is that psychologically it can be quite nice to get to the point where you've got your original money back, and you're playing with the house's money. So if you let's say you have some triggers earlier on, some thresholds to reach. Once you've got your money back, maybe you could lift the threshold a bit to allow more of the gains to come through. Because the problem with having the threshold too low is that you haven't let enough gains to happen. You haven't let the price increase enough before you're starting to sell it. So there's a balance to be had between where you set that trigger, but where you set that threshold. But I think it's critical for institutional investors to have some plan that they can act quickly. And as we know, the Bitcoin price can go up and down quite quickly. So it needs to be a plan to act quickly. Oh, the other question you asked was, if the price goes down, do we buy more? Not as a default situation.
Okay.
So there'll be a discussion, but that's always a bit more of a. It's perfectly reasonable to say we're not going to buy any more. We're just going to ride it out, and just wait for it to hit our threshold when we can sell some. So that's a perfectly reasonable approach, but obviously there's the possibility they might want to top up.
Yeah. Okay. Yeah, that all makes sense, and I kind of thought that's how it would work. But I couldn't. The amount of questions around that topic.
Really? Oh, wow.
So you've answered that very well. That's that'll. Let's move on. Actually, let's move on to another big one, which was the custody, because this is very interesting what you've done here. So it must have been very difficult to find the right asset manager for this Bitcoin, because you're actually buying the Bitcoin. So how is that process of finding that and making sure it was the most watertight that you could get, or watertight solution that you could get? I was, for example, last night I was with someone in the banking industry, and they're saying the biggest concern for the company that they work for is custody and custody solutions, because as any person on Bitcoin knows, that you are taking that responsibility on yourself. How did you go about this, and take me through the process of landing on who you landed on?
Sure thing. Well, it's quite a lot there.
Yeah, sorry. Just go through the process of it. We've got time.
So what principles were we looking at? So we were one of the key benefits of Bitcoin compared to any other investment that a pension scheme or charity or so would have is the ability to hold it outside the current monetary system, and importantly, without counterparty risk. So the only other asset really is gold coins, and the pension scheme's not going to hold gold coins. I suppose allocated physical gold might be the closest one. So I suppose that would be similar, but they don't do that either generally. So this is a very different asset to everything else that they hold, but it's because it's so different that it gives that diversification against events that might happen in the world over the next 10 years. So we were very keen from the start to make sure we took advantage of that ability to not have counterparty risk, or at least to minimise it as much as absolutely possible. So I guess the extreme version of that would be, let's say you've got 5 trustees on the pension scheme board. You could give them each a cold card or a Trezor or something, and you could set up a multi-sig where 3 of the trustees have to sign for each transaction. Usual sort of multi-sig arrangement, but for them, we didn't think that would fly at all. It's hard enough to get your head around the asset and what is money and all this kind of stuff. That would have
added on another year of training.
The idea of them sort of, it just wouldn't be fair to the idea of them sort of tapping into all the numbers into the cold card. So So that wasn't that's and maybe that'll happen at some point. Maybe in the future, maybe that is the way we'll end up. But it doesn't feel like we're anywhere near that. Right. Okay, so what's the next best option? Well, the next best option is to have institutions who, on your behalf, are holding each of those keys. So maybe 3 keys, maybe 5 keys. The exact number doesn't really matter. The point is it's a multi-signature approach. And if you can get different institutions to hold each of those keys with their own policies and procedures around each one, so they're keeping them safe, that is as close as you can get in a practical way. And so that's what we've got. And so I've seen some sort of misunderstandings as well about what we may or may not have done. But we are holding on-chain, the trustees own on-chain Bitcoin. There's some technicalities. For example, it's held through a trust and so on like that, which makes it easier to operationally, economies of scale and so on. But we had a very exciting sort of hour or so where we knew that the transaction had been sent, and we were watching the address and we could see it come in. It was unconfirmed. And then, well, first of all, you have that sort of heartbeat of, will it turn up?
Yeah,
I'm sure everyone's experienced.
Yeah, I remember those well.
And then, of course, you come to have confidence in the network. So anyway, so we saw it coming, it's unconfirmed, and then yes, it got the confirmation, and so and you can see the transaction costs. And I think the transaction costs were, so for £1.5 million, it was in dollars, but it was about £2 was the transaction cost, which seemed pretty good to me.
So that's pretty damn good.
So that was a really really good moment, and the ability then for the trustees, we've given them that Bitcoin address so they can look it up. They don't hold private keys, we don't hold private keys, but we know the Bitcoin address, and we can then, any of us, as all the trustees, can go to mempool.space, plug in the address, and see their transaction that's happened, and indeed any future transactions that will happen. It's all brilliantly transparent, as we know. In fact, more transparent than any other asset class. So it's sort of a 10x better solution in terms of that, as well as lots of other things.
It's so incredible to me that, well, firstly, that you've managed to do this where we are in the UK, like, and the scheme, of course, congrats to them. I want to say that. And then also that you've done it this way. And I think that's what makes it huge, is that they have the Bitcoin.
Yes.
That's what makes this really special to me anyway. The way that you've gone about this and not tried to cut corners, essentially, and done it the right way.
We could have bought an ETF, couldn't we?
Exactly.
And yeah, okay, maybe we could have done it a bit quicker if we'd done that. But we're talking here about something that we want to have confidence in for the next 10 years, maybe 8 years, if it goes as expected. So that's a lot can happen in 8 years. And given you have an asset here, which is one of the few bearer assets you can hold, why would you not do it? Yeah, okay, some of it's a bit more complicated, but there's also some elegance to it once you set it up.
Yeah, and it gives them a better understanding of it as well, because I guess they've gone through this whole process rather than just looking for the ETFs and like something that maybe they're used to. This is a whole new process of learning, which is you're actually educating someone about Bitcoin, rather than just showing them what the market is actually doing, which is very special to me.
That's good. So it's a very, obviously it's very sort of detailed due diligence process, and we put a lot of work into making sure that we're doing everything in the right way, making sure that we comply with all the investment regulations that we've got here in the UK, from a pension scheme, but general perspective as well. Big thanks go out to OnRamp, who were extremely helpful. So thank you to Michael and Jesse in particular, for what felt like a process at points that was going on for forever. But obviously just delighted that we were able to get it over the line.
Yeah, it's amazing news. This is my last question on this topic, and then we'll move on to the event that you had this week, which looked incredible, and then the rebranding. But how's it been? Let's not go into too much detail about this because I'm going to talk about regulation. And this is where people would maybe turn off and they're like,
Yeah.
they're like, oh no. But how has it been with the regulation in the UK? Have you had quite a few stumbling blocks, or what's it been like?
It's not too bad because pension schemes have a really wide investment remit. So they can invest in all kinds of things, complex derivatives and physical property, as well as various investment funds. So they've got massive flexibility. There are sometimes some restrictions, and the overriding constraint is that they must be acting prudently. And so that's why the modelling that we did, which essentially was showing that, okay, you can put 3% in and your sort of overall portfolio volatility maybe goes up a tad overall, but your return expectations shoot up. So that's why that was important, because it was really, really important that they were acting prudently and sensibly. And that analysis about, well, the 10 years only goes to 10 years, 3 months. Again, you're not being reckless. You're being sensible. Yeah. You're taking advantage of an opportunity. And if we look back over history, in the 1970s, pension schemes started to invest in equities. The first person to have done that, everyone else must have looked at them and think, what are you doing? Why are you investing in these risky things? Why would you want a share of a company in that way? But now it's normal. When was it, the 1980s, I suppose, we had high yield bonds come in and pension schemes. And the first one there everyone else must have looked around and said, why would you invest in why not something that's safer? Why something like a high yield or junk bond? It was literally called a junk bond. But now it's normal. And then, of course, I definitely won't go into detail on this one, but liability driven investment. Now, that was, you go back in the early 2010s, and a lot of eyebrows raised about what it was, but now it's completely normal. Okay, there are now a few eyebrows raised because of what happened with the gilts crisis in 22, but it is still normal, very, very normal for DB pension schemes to invest in something like liability driven investment. So I think we're just going through a similar adoption curve, and this is the first one, so we're going to get lots of eyebrows raised. But actually not as many as I thought. But in 5 years' time, we'll be thinking, why didn't I do it earlier?
Yeah.
Imagine that. Imagine people in Bitcoin thinking, if only I'd done it earlier.
That never happens. It's I think you're right. It's about being at the forefront of this and bringing this into more traditional markets, more traditional finance, which, as we know, takes time to do it. But it's about having that conviction and the conviction for change. I'm always talking about time. We live in a changing world. It's always changing. So you have to change as well. And so does a company. Companies have to change. You don't want to be Blockbuster to Netflix because you see what happens to them. So it's so nice to see that like you're taking that first step in the UK, and you've rebranded this week as well.
Yes.
Uh,
Yes.
Congrats. That's is that to why have you rebranded? Actually, I'll ask you.
Yeah. So it was just, I guess, a couple of reasons, backwards and forwards looking. So the backwards reason was that it was 10 years ago since we last rebranded, and that's a normal sort of period after which you refresh, you sense check, and through that sense check, we realised that actually we were doing innovative things internally, but that wasn't reflected in our brand. So we were able to refresh up, and for those people out there that know what our old brand looked like and now look at our new brand, I hope that's the idea.
Yeah,
But I
I
hope
like
that they
it.
look at that and they think, "Wow, yeah, that's much more dynamic, it's more innovative." So the logo looks like it's moving a bit more and stuff like this. So you got a bit more of that going on. So hopefully that reflects it. And the other reason was to do with our markets are changing, and the existing market of pension trust is incredibly important to us, and we are hoping to continue to grow that business. But we've got other ideas as well, and so we launched our Cartwright charitable trusts on Wednesday as well, at the same time as we launched the new website for pension trusts. So that's just a starter for, we've got other ideas, we've got transferable skills to other areas. I think it's only fair that we do transfer them, both to our staff who are keen to express themselves, but also if we don't do it, potential clients are going to miss out, aren't they? So so it's to sort of incorporate a few things like that.
Amazing. And I guess like the last thing that you're part of your crazy week has been this event that you had on Wednesday. So am I right in saying that you brought trustees to this event, and what was the aim of it, or the messaging that you wanted to get across?
So, I mean, part of the reason was to bring people together. What we're keen to do is have the conversation. Bitcoin isn't right for everyone or for every pension scheme. That's absolutely, that is a fact, and that's fine. But it is right for a lot of them, and so we want to make sure people have that conversation and are able to ask questions. So that was part of it. Another part of it is related to, and this leads into what the film's about, which is about. It covers sort of environmental and social benefits. It's not. I mean, I don't think it's particularly biased in favour. I mean, it does bring up some other topics as well related to its sort of history, some of the history of Bitcoin that isn't as positive. But the real takeaway messages are, I think, how Bitcoin and Bitcoin mining in particular can help on the environmental and the social side. And for pension schemes and charities, that can be a big hurdle, because if they just read the headlines in the papers, although some of those are better now than they used to be, if you go back a few years, they were all anti.
Yeah.
Bitcoin is bad for the environment. Bitcoin is terrible. You're a horrible person if you even think about the word Bitcoin. Whereas the reality is that it's incredibly positive in various different ways. And that's what we were trying to encourage the discussion of. So I think there were a lot of eyes that were opened. The way it worked was that we showed the film. We then had a panel afterwards, and we had some great people on that, including from Bitcoin Policy UK, Musket, and Axiom, and we just had questions from the floor, and we had some really good questions actually. So I really felt that we got the conversation going, and there was lots of discussion afterwards as well. And when we broke for drinks, and we gave everyone a gift, which was, I'll send you one actually, Jordan. So if I'm getting this
Nice.
on camera, right? So we had. I don't know if my camera is backwards or forwards, but is that?
Yeah.
Can you read that word the right way around? Is my
Um,
camera mirrored?
yeah, no, I can see it. Yeah.
Yeah.
So it's a
So
on you.
this is a Bolt card. So we gave everyone one of these, and you can obviously see it's got a new logo on it there, and it can. The Musket terminals, this is a new development, can now accept bulk payments, which for those who don't know what that is, essentially it means that you can take one of these cards, which has got £10 worth of Bitcoin on it. You can tap it on the point of sale terminal and the Musket point of sale terminals, and just use it like a normal credit card, like a contactless payment. So it's really easy to use. And the key point here was we were trying to say it's just money. Right? Go and buy a drink at the bar. And then over the other side, we had, again, I don't know if you can read that properly,
Yeah.
but we had a little bit there talking about it being a little bit of the financial future, and then we have there's a website there and a email
Yeah.
address for
That's
people who are interested and want to talk more about it. So this was
that's clever.
these were brilliant, and again a good conversation starter. So we had. So I suppose there's So thinking about that, there were two sort of things. One is to start to break down those environmental and social barriers which shouldn't really be there. We know that, but the message isn't yet out there fully. And to start to normalise Bitcoin, just money.
That's brilliant. Like that's the best way of doing it as well. I'm glad that you've done that because that's what we done at our conference 2 years ago. Is we had the cards as well, and we were using it to demonstrate and to show people that you can just go and spend it. And I think being able to see it in action is very important. So for some people, it's that aha moment. And then with the event, the best thing probably is like being able to ask questions in a place that you feel comfortable to ask it. That must have been really nice to see. People just asking questions, having discussions, bringing up their worries about it, and getting expert answers back.
Yeah, exactly. So there were, so one of the, might have even been the first question was around, is Bitcoin just about being a store of value? Is it really a medium of exchange? And then I'm not going to go with what the answer was, but we had David from Musket there on the panel, so he was able to talk about the medium of exchange point in terms of payments, but also trying to draw out, okay, well, that's looking at it from a Western point of view, where you look at Bitcoin as an asset to put in your portfolio to then be worth more in the future than it is now. But for a lot of people where their government currency isn't working very well, emerging markets, etc., then it's more of a medium of exchange. And just, again, I think that's part of what we need to try and do as an industry, actually, is to help people get out of their bubble and realise that not everyone in the world is like them. And then think, okay, what are the attributes of having a permissionless, fixed supply money, which can be used anywhere in the world and transferred at the speed of light, etc. All the things we already know. How can that apply to people all around the world in different situations? And pension schemes are meant to think, and charities are meant to think hard about what's the environmental impact of things that they invest in and use. And hopefully we can flip the narrative to the truth, which is that Bitcoin is amazing for environmental benefits and amazing for social benefits. And there's obviously loads of resources out there to help people go through the detail, but just trying to get that message over and realise. And when people do, that should help to encourage more and more people to learn more about this.
I love it. That's this is a very nice way to wrap up. I've got just one question for you, which is where next? You've got the first pension scheme allocating. Are there any more potential on the horizon? And yeah, what's the future for Cartwright in that terms?
We've got different angles there, of course, because we're looking at pension schemes, but also charities. I think family firms or family offices would also be, and this is an ideal asset for a family office.
Yeah.
When you talk about generational wealth, where else are you going to go?
Exactly.
So we've got. So I think there's pent up demand. I think there's a lot of pent up demand. The idea that only one pension scheme will ever invest in Bitcoin just sounds ludicrous. I say it out loud, it sounds ludicrous.
Yeah.
So I think there's pent up demand, and some of that will be within our existing clients, and we've had initial conversations, and maybe they've got a bit of cold feet. Hopefully, this will invigorate them to go back to it and think harder about that decision. So I'm sure there will be some activity there. I'm sure there will be activity across the industry when people, again, the door is now open. And the risky position is not to have considered Bitcoin. So, I've already got some phone calls, but I'm expecting more phone calls as we go on. I mean, my emails are out of control, so I might have loads of emails in there.
They're for next week.
So if anyone's listening and I haven't replied, I'm sorry.
It's amazing to hear, and it's like you've pioneered the way in the UK, and you've done it the right way, which is good because it then sets a benchmark for everyone else.
Yes.
Which is, as I said, why I love what you've done and the team's done and the scheme's done. I honestly think it's huge for us and where we are and for Bitcoin as well.
Mm-hmm.
So yeah, I thank you so much for coming on the show and sharing all of this. I think we've covered a lot of the questions that I had, and I know lots of people out there had. Yeah, thank you so much. And is there anything else I haven't touched on, or do you think we've covered the majority of it?
I think I've tried to cover as much what I had in mind. For those that are live in Surrey or near Surrey, I'll give a little bit of publicity to a Bitcoin Surrey event that's happening in January. I think it's the 21st of January. There's a pub in Farnham, I believe. So I'll be talking there, doing a bit of a fireside chat. So if anyone wants to
come down
more,
to that,
then yeah, very good. So
I'll put a link below. I think it's just easier for people. I'll also I'll link to Cartwright and just so it's easy for people to find where to go. I did not know about that event, so yeah, I might book a ticket.
Good. I hope Chris doesn't mind me saying that. I'm sure he won't.
Awesome. Well, thank you so much, and especially on a Friday.
Thanks for having me on. Good to chat as always, Jordan.
Yeah, it's always good to chat with you.